start off, thank you very much for everyone who came out today. I know there are a lot of presentations going on and things are kicking off, so I appreciate you being here. As Michael mentioned, my name is Jamie Keech. I am the founder of an investment research service that we call Resource Insider. And before that, I was a mining engineer. And basically what we do, it's pretty simple. I fly around the world, I go on site visits, I meet with management teams, and we look for mining investment opportunities, private placements to put our own money in. We have subscribers that are all accredited investors. I invest, and then they have the opportunity to invest alongside me at the same terms and the same price. What we don't do is take finder's fees or commissions. We don't take any money from the companies we cover. We try to be very, very aligned with our investors, and we really try to be transparent in everything we do. And in that spirit, how many people were at Cambridge House last year? Did anyone see my talk? So, all right, Steve saw my talk in the back. So I talked about, it was called How You Got Screwed in 2018, and it was about common missteps of investors in Canadian capital markets, particularly in the mining space, where things can go wrong and how people really get screwed over. And I didn't really think much of this. I didn't expect a lot of people to be there. But after the fact, I ended up getting hundreds and hundreds of emails because I clearly hit a nerve. And most of those emails went something like, I've been screwed over. I'm pissed off about it. What do I do now? What do I do now? How do I not consistently get screwed over by companies doing the wrong thing? So I spent the last couple months thinking about that, contemplating that, and the purpose of my talk today is really to answer that question. How do you win at this game of junior venture investing? How do you not get screwed? A big part of my job when I started was learning how the best people in the space make money. There are hundreds of thousands of people around the world investing in the mining sector. There's a very small handful of them that are really successful. So I wanted to learn firsthand from all these people what they were doing differently to see returns on their investments, to build great companies. Very simple. So I set up something called the Resource Insider podcast that basically gave me an excuse to track these people down and pick their minds for an hour or two at a time. And if you haven't listened to it, I would highly recommend it. They're all free. They're all on the internet. And I just sit down with all these guys, the Ross Beatties of the world, the Marco Days, the Nolan Watsons, and I say, how'd you do it? What do you do differently? And doing this dozens of times over the last year and a half, I've started to see certain patterns, certain trends. A lot of these guys are doing the same thing again and again and again. They're doing things the same way, and it's a lot different than the way most people are doing it. So my goal for this was to try to codify some of the things they were doing, and I've really kind of narrowed it down to three themes that I think that they're all applying to their investment strategies, that I certainly try to apply to the investments that we cover at Resource Insider, and that is what we're going to talk about today. It's very simple. Access, simplicity, and vision. Access. So access is about getting access to the best opportunities in the space. You want to get access to tier 1 deals. Simplicity is more about avoiding unnecessary complexity. It's about focusing on the fundamentals of your investment strategy. And vision is understanding why you are buying a stock. And this is all very simple stuff. None of it's groundbreaking, but I think if you apply it, you're going to have a much better chance of making money. And you would probably be surprised at how few people are thinking about these things, yet everybody in that last slide is consistently. So let's start with access. If you want to succeed at this game, and this game I mean early stage venture investing in the natural resource space, you need to get access to the best deals. Now, this is an extremely non-linear space, and by that, I'm sure a lot of you already know, it's the top 1 to 2% of deals that pretty much deliver all the returns for the entire industry. Especially exploration projects are basically designed to fail. So if you're trying to get access into these deals, and by access I mean, can you get into it at a good price when you want, and you're getting cut out, you're not able to get it, and other people are, it's almost going to be impossible for you to win in any significant way. And because this is high risk investing, you need to get into the good deals if you want to win. It's essentially the Pareto distribution on steroids. Have you ever heard of the 80-20 rule? Well, it's not the 80-20 rule, it's really the 1% rule. And if you were to knock out the top 2 or 3 stocks of the average resource investor's portfolio, mine, probably most of yours, that could go from a portfolio that's up 2 or 3 times over the course of a year to one that's down. So if you can't get access to good deals, you're pretty much screwed right before you start. And what I want to talk about are some strategies to actually go out and do that and to find good opportunities. So starting off, we have a good example of how important access is. So there are some professions which are entirely based on access. So who in this audience has a stockbroker? And I mean someone you actually call on the end of the phone line and they make your trades for you. So I have one. So about probably 30%. If we were to go back 10 years ago, it would be most people in this crowd. If we were to go back 20 years ago, every single person who wanted to buy a stock would have had to go through a broker, right? And you think about this in the 80s or the 90s, you want to buy a mining stock, you got to go through a broker. You want to learn about a mining company, well, there's no website, there's no CDR, there's nowhere to go to easily get access, so you probably went through your broker. And the brokerage game is an access to information game. And it gave them tremendous power. It also made them very, very wealthy. A lot of these guys were the richest people in the business. And then the internet came along, and online trading came along, and websites, et cetera, et cetera, et cetera. And brokers became a lot less powerful because it was no longer about access, and it became about interpretation. So today, a good broker, his job is to help you interpret a company, evaluate a company. They're evaluating information instead of giving you access to information. It's a lot less lucrative, and there are a lot less brokers today. And that's a good example of how we can see the importance of access and what happens when you lose it. Does anyone know who this guy is? Because he is a perfect example of what happens when you get access. No one knows who he is. Okay, oh, one guy knows. He may look like a dirty hippie artist to you, and he is that exactly. But his name is David Cho. He's a graffiti artist. And in around 2012, he was commissioned to paint a mural on a wall in an office in San Francisco. Okay? He paints the mural, and he decides, you know what, instead of taking cash, I'm going to take stock. That company turned out to be Facebook, and now David Cho is worth $200 million. And this is a perfect example of someone that had a unique skill set. He utilized that to get access to an opportunity that most people don't get, and now he is filthy rich. So I want to talk a little bit about what you can do to actually get access and the steps you can take. And the way I think about it, there's really 3 different ways you can do it. The first is you add value, and that's what David Cho did. You have a skill set that these companies want, and that's what most people working in the industry do. So this is the lawyers and the engineers and the geologists. They'll get in, they'll get their option packages or some free stock for adding value. Now, that's not going to apply to most people because most people don't work in the mining industry. The next is you can buy it. If you have a lot of money and you want to spend it on mining deals and you're willing to shill out millions of dollars consistently, you're going to get noticed and people are going to want you in their deals, and over time you will spend your way into the best deals. Again, this is probably not going to apply to most people. What is most common, and I would say the best choice for probably most people listening here, is to leverage somebody else's access. So when you put your money in a fund, you're relying on that fund manager's access to get into good opportunities. When you do have a broker that's extremely well connected, like I do, and he's in this audience right now, you get exposure to deals you wouldn't otherwise find, or you can buy a newsletter like mine. Because what we're focused on every day is getting into deals that are very hard to get into, that are oversubscribed, that are competitive. So these are some strategies you need to think about applying. If you're not getting into the deals you want to get into, you're going to be in trouble. My next point is simplicity. So I'm going to read that quote. Any intelligent fool can make things bigger and more complex. It takes a touch of genius and a lot of courage to move in the opposite direction. So Einstein said that. I'm going to say something here that I think I'm going to get a lot of shit for on the internet, but I think that it's very, very true. So people tend to overcomplicate investing in mining projects. And this is particularly true when they are in the exploration stage or the development stage. There's going to be reams of data justifying investments, but mostly what you're doing is guessing, right? You're guessing. And think for a second about the big companies and the big funds and private equity groups. They get it wrong all the time, and they've got hundreds of people working around the clock to make these decisions. And no matter what you wrap them up in, no matter what data, what you're doing is essentially you're making a bet. If you're running a drilling program, you're saying, well, we've looked at the hand samples and we've done some geophysics, but we're going to sink a hole over there and see if there's a gold mine. Sometimes there is, and you win, and you look like a genius, and sometimes there isn't. But you're making a bet. And your job as an investor, and my job, is to try to make the best bets possible. And the way to do that is keep it simple, focus on fundamentals, don't overcomplicate things, and really focus on how you're managing risk. These are the fundamentals that I think are most important. And different people are going to have a different list, but this has worked pretty well for me, and it's something we deploy every day with Resource Insider and the deals that we do. So, start with size. In mining, bigger is always better. The downside for a small deal and a big deal is the exact same. You go to zero, and the likelihood of that happens tends to be the same as well. So you're taking a tremendous amount of risk here. So you want to invest in projects that have massive upside. If you focus just on that, you're going to massively increase the chances of success, because all you need is one or two to work out, and the scale of that will really help compensate for your losers. The next is location. This is essentially jurisdiction risk. You've probably heard about it before, but 1 million ounces in Nevada is not the same thing as 1 million ounces of gold in Argentina or in Alaska. These are valued differently, and if you are prepared to take on country risk, if you're prepared to invest in difficult jurisdictions, then the prize needs to be bigger. It needs to be better, because the chances of something going wrong are also higher. All right, probably the most important one, and the thing that we're most focused on at Resource Insider, is track record. The best way to determine if somebody can do something is if they have done it before. Mining is not mining. Building a gold mine in Nevada is not the same thing as exploring for copper in Chile. And if you're going to invest in Nevada, if you're going to invest in an exploration team, for example, you want someone that has previously found a mine in Nevada. If you do this one thing, you're probably going to eliminate, off the top, 95% of companies, and the ones that are left are going to have the highest chance of success, because the people aren't doing something new. They're not redesigning the wheel. They're just trying to repeat past successes. Access to capital. This is the thing I think that is most overlooked by new investors, and this all comes down to the fact that pretty much any mining or exploration project you invest in is going to take twice as long and probably cost twice as much money as management teams are going to tell you. They're going to need to finance more often than they expect or than you would hope for. And if they do not have access to deep-pocketed investors who are able to refinance that company at a good valuation, you're going to be in trouble. You're going to get diluted. So how do we look for this? Well, we look at who they've gotten funding from in the past, who's already in the company. When I invest with Resource Insider, I basically want our group to be the smallest possible investor. I'm looking to invest alongside big funds or private equity firms, streaming companies, corporates, super high net worth individuals like the Ross Beatties or the Lucas Lundins. If these people are involved and they believe in the project, they're going to be able to support it, and then that doesn't fall to me or you. And the last one is aligned incentives. I spoke at length about this last year, but basically the simple premise is management should not be able to get rich without making their shareholders money. And the way to tell if that's the case is you need to understand how much stock they own, what price they bought it at, how are they getting compensated, what are their option packages. It's your responsibility as an investor to figure these things out, because if you don't, you're massively exposing yourself to risk. So, that's what I would say for simplicity. Keep it very simple and uncomplicated. Focus on what matters and really manage your risk so that you can make better bets. All right, the last point is vision. Vision is the art of seeing what is invisible to others. Now, what I really mean by vision is understanding why you are investing in something. Sounds pretty simple, right? Why am I buying a stock? You'd actually probably be surprised the number of people who have no idea why they're buying a stock. And you see this so often only in stock purchase. No one invests in other areas of their life without really understanding what they're doing. No one buys a house and doesn't have a vision for the location and the number of bedrooms and how close it is to work. But people will buy a stock because their friend told them it was a good idea or they read an article on the internet. If you don't have a vision, you're going to get taken advantage of. Who knows who this guy is? Yeah, most of you probably should know who this is. This is Robert Friedland. He's probably the most successful mining entrepreneur of our time. He's found, I don't know how many discoveries, built mines all over the world, made billions of dollars. Okay, Robert has said he believes there is a second industrial revolution coming. He believes in electrification. He believes we'll all be driving electric vehicles soon. He believes that copper demand is going to be psychedelic. Because of this, it has driven his investment strategy. This has been his vision, and he has built copper mines in Mongolia. He's building another one now in the DRC. It's on track to be one of the biggest mines in the world. And because of this vision and this consistency, he's made billions of dollars for himself along the way and a lot of money for his dedicated shareholders. If you don't have this vision for what you're trying to do, you really risk being fickle, and you'll jump on hot trends or you'll sell too soon, and you won't be there for what these big wins are, sort of at the end of the rainbow, which is really why we're doing this. You know, this is high risk investing. We're trying to get bigger returns, and you have to have a clear understanding of what you're trying to achieve and why you're buying what you're buying. So that's it, guys. Those are the 3 things we're focused on, and we basically take care of that at Resource Insider. But the problem with Resource Insider is it is for accredited investors only. And if you don't know what that is, it means you need to make over $200,000 a year, or you need to have $1 million in the bank, basically. And it depends on your country that you're from. And a lot of the emails and questions I've been getting are from non-accredited investors who can't buy our product. So I wanted to put something together that would help retail investors execute on all these things. And I think we've done it. And I'm super excited about it. And we're launching it now. It's called the Resource Insider Challenge. And the problem with most things is you're just getting one person's opinion, and most people's opinions are wrong. And what this is designed to do is to get direct information from the best people in the space. So if you see all those guys up there, Ross Beatty, you know, he's a billionaire entrepreneur. Warren Irwin, he's a fund manager. Nolan Watson, he's the CEO of Sandstorm. All these 11 people, they're going to be taking part in a stock picking challenge this year. So we've got them all together. They've submitted their top picks for me, and we're going to be pitting them against each other through the year. And this time next year, we're going to get to announce a winner. So we're actually going to see who's the best of these at driving a stock and picking a stock. But what is in that for you is when you sign up for this, and it's free, it's 100% free, you're going to get to see their top picks for the year. We're going to be doing in-depth coverage on each of the companies that have been listed. You're going to get to know why they chose them, what their investment strategy is, and what they expect to see out of it. So you're essentially getting a group of billionaires and fund managers and CEOs design a portfolio for you of what they think is going to be the best returning stocks of 2020. So if you're interested in learning about this and following along throughout the year, you just go to resourceinsiderchallenge.com, sign up. You're going to get access for free. It starts tomorrow, Monday morning. We're going to have live charts to track everything. And over the year, you're going to get a lot of great information that I think is going to really help you cover all the 3 points we talked about today and build a truly effective resource portfolio. That's it, guys. Thank you very much for listening. And please let me know if you have any questions after the fact. I'll be around.